General disclosure statement. This content is for informational and educational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. Nothing contained here constitutes a solicitation, recommendation, endorsement, or offer to buy or sell any securities or other financial instruments whatsoever by the author, presenter, or other associated parties for the content being provided. Please do your own due diligence and seek proper counsel. Thank you.
Hello and welcome to CapCity BTC, Sacramento's premier Bitcoin and cryptocurrency group, serving Northern California. Enjoy the presentation.
To begin, we have a speaker from the compliance and regulatory space, and he has been a part of this community for a very long time. He's an awesome guy. Joe, you can take it away from here.
All right, thanks, Ron. Yeah, happy to talk compliance and regulatory matters. Hold your tomatoes till the end. So I'll give you a little bit of an update about what's going on in the compliance world. So for those that are new or those that haven't met, hi everybody, Joe Chicolo. I'm the founder of BitAML, and we provide regulatory compliance services and consulting to the crypto space. So yeah, I'm happy to share a regulatory compliance update from time to time. I like to kind of share some musings about what's going on, what we hear from our contact with, and as well things we may hear from regulators and law enforcement. So a couple things I wanted to cover tonight. I don't know if anybody heard about the Harrill coin. So Harrill coin was a Bitcoin ATM operator down in Southern California, San Bernardino, Riverside, down that way. And the Department of Justice arrested the operator and seized, I think it was about 17 or so machines, allegedly $25 million in laundering, unlicensed money transmitter, didn't file SARs or CTRs, didn't maintain an effective compliance program, did some sales of questionable transactions with some undercover agents, allegedly. And that person is looking at about 30 years in prison, entered a guilty plea. So that should be pretty interesting. There's definitely a lot more, I'm sure, that's to come. The only thing we're going on right now is what the Department of Justice says. So everybody has their right to a fair trial and, of course, a right to present their own evidence and their own materials. But I just thought that was an interesting case, and it should be a reminder to all of us, whether you're a Bitcoin ATM operator or some other exchanger in the space, not only to maintain an AML program, but to maintain an effective one. Allegedly, there was no ID that was being done verifying customers. Again, SARs and CTRs weren't being filed. So it'll be an interesting case to watch. I mean, certainly a lot at stake for this particular individual in terms of their liberties, but a lot to cover. It appears that the government continues to investigate these types of activities and really looking and putting a microscope on crypto. So I believe the company is called Pronounced Hero Coin. It's one word. So if you want to Google that, you can see the Department of Justice releasing their statement about the guilty plea. And there's a handful of different stories that are posted. Someone was kind enough to share it in our private, or excuse me, in our Zoom group chat. So if you want to take a look at that, it's been addressed to everyone. So you can click on that at your leisure. A few other things from the world of crypto compliance. Big announcement from the OCC. I'm sure many of you saw that, a clarification. Brian Brooks, formerly of Coinbase. My understanding is that he sold all of his options or shares that he had in Coinbase, so he was completely out of crypto before he took the job as the interim director of the OCC. And in that role, Mr. Brooks issued a clarification saying that banks can custody crypto. And I know for all of you in the crypto space, you're all sort of cringing, right? And I was like, oh, custody, that means they have my private keys. Not your keys, not your crypto. I certainly don't dispute that, and I don't think anybody else in this call would contest that. But sort of perversely, from the perspective of us in crypto, this is good news because now we can maybe appeal to a more broader mainstream audience that feels, for whatever reason, it escapes me, is much more into its bank than it may be into some of us in the crypto space. It may be a little bit more comforting to them. So I think this story has been underreported. Certainly not in the crypto space. I think there's a lot of excitement and fanfare, and it's well deserved. But I think it's actually going to be bigger than a lot of people think, including some people in the crypto space. Not right away, but over time. And I do think who it benefits the most is big banks, really, because at the end of the day, if they custody crypto funds, it's probably not going to put a lot of pressure in terms of stress testing, right? So if you're a large institution, you have all these deposits, and you're a little bit more arguably secure than a smaller community bank. And it's especially going to benefit the larger banks that have already participation in the crypto space. So think about Silvergate and Metropolitan getting in fairly early in terms of crypto years, having 1, 2, 3, 4, whatever it is, years of regulatory examinations. They're battle tested. They've been through the ringer with the regulators, and they're ready to rock and roll. They have some controls. They're probably going to have to tweak it, obviously, to accommodate a new product or service, as they should, but they're not necessarily starting from scratch like other banks. So I look for those to be the first sort of iteration, the first sort of class that will benefit from this. And then I think maybe the second class would be your JP Morgans, your Wells, and some other institutions that may not necessarily be active in crypto, but are big enough and have the resources enough and have the capability to pass stress testing and not really have to blink by taking on some crypto deposits, which would be a drop in the bucket relative to their portfolio. So definitely keep an eye on that. And I think it's great news all around. Historically, if there's been some sort of clarification or response to a question that a regulator has answered, it's almost, nothing's impossible, but it's almost impossible to walk that back once you've answered that. So while this is not regulatory guidance, it's a clarification, but regulators are really loath to go back and recorrect something like that in time. So lest you be worried about the next election cycle or who might be coming in, and Mr. Brooks has an interim title, so who knows how long he may or may not be there. He's not been confirmed, but I think this one's probably here to stay. A few other notes just from the miscellaneous category. We talked to a few companies out there. There's some exchanges that have been contacted by law enforcement regarding elder abuse. So if you're a crypto player in the space, whether you own a crypto BTM or you're part of an exchange or you have a product or service and you're in the market or going to the market, definitely be cognizant of what your controls for elder abuse. There's a lot of things like romance scams, and I know that Mario has talked about scams in the past and things like that. I'm sure some other members have some experience from customers or things they might have heard, but definitely keep an eye on that, be reporting suspicious activity, and stay on top of that. It seems like there's a little bit of an extra push, at least from what we hear anecdotally in the space. And then finally, still in the miscellaneous grab bag, if you will, of compliance, some points of emphasis that seem to be popping up in media here and there in the world of regulation and crypto. There's a thought that perhaps regulators might get a little tougher on things that having to do with Lightning Network, and companies that may be offering so-called privacy coins. So I think you may have seen a few exchanges, including one particular, not here in the United States, but offshore, that delisted about 27 or so. I think it was 27. Anyway, a significant number of coins they started delisting, or rather not offering support for any longer. So I think you're going to see that as a continued point of emphasis. And that's something in the US I feel like we're quite tested in that with the SEC, looking to make sure that you're not offering securities on your platform or things like that. So definitely keep those in mind. But yeah, other than that, if you guys have any questions about compliance, anything like that, please drop me a line. If you want to send me a private message and arrange for some sort of one-on-one, I'm happy to do that as well. Or if you want to post questions, if there's time at the end, Gibran, I'm happy to make myself available. But I certainly don't want to take away from today's amazing guest. But I'll turn it back to you, Gibran. Thanks so much.
Yeah, if anyone wants to follow Joe or BitAML, I'll actually put the BitAML link in the chat here. I highly recommend following him for anything to do with crypto compliance, especially as things are changing and continuously changing and updating. It's really important to stay updated on what's going on and have a reliable source of information. So Joe is definitely that source of information for us, and he does this for us very graciously. So follow that, click the link in the chat, and you can follow him there.
My pleasure. Thanks, Gibran.
I will take you off the screen here. There we go. Just as a reiteration for everyone who's joined, this is a meetup in collaboration with a couple organizations: Sacramento Bitcoin Meetup, Starfish, Mission, and San Francisco Blockchain Social Group. The theme of today's event is blockchain security, and I'm really excited about our speaker, our headlining speaker today. A little bit of background. A lot of us have been following the DeFi space recently. The last few events we've had were really focused around DeFi. As this industry continues to grow, a lot of concern has come up around security because of a few hacks and some security holes that have shown up in the space. Luckily, there is a company in the space that is fighting for more secure transactions and more secure experiences with the DeFi and with other aspects of the blockchain industry as well. This company is QuantStamp. Their mission is to secure the decentralized internet, and so far they've protected over $1 billion in digital assets from hackers, which is really awesome. I'm not going to talk too much about QuantStamp. I'll let our speaker do this, but our speaker is really great because she's been in the space for a while, and her passion has been to actually bridge the newbies who are in the space with the information that is constantly changing, but also educate them in a way that is simple and easy to understand. So everyone is muted, so you won't be able to hear it, but everyone give it up for Jaye from QuantStamp. A little round of applause here. You're only going to hear my clapping, but everyone's clapping.
Thank you so much. Yeah, I've been in the space for a while, and it's great to be here. As I said, kind of in the prelude, it's always great meeting actual meetup groups and actual brick and mortar spaces. I've been doing this for a while, and I've been with QuantStamp since late 2017. and we've just been trying to, keep pushing harder and do really cool stuff. We recently shipped the full like Prismatic Labs Prism ETH2 client audit. So we've been doing a lot of layer ones. We also have worked with Avalanche for Ava Labs, and we have a few others that we're working on. So yeah, we work with a lot of people. I think Decentralized is another one that's pretty interesting. We've even done some RSK stuff and some other Bitcoin related stuff, more on the side chains or the cross chain liquidity, that sort of stuff. So, but yeah, I did want to mention one thing was talked about before about the custody at banks. I think that's really interesting too, because I'm thinking about it like, okay, well, is that really a retailer, like a retail product, or is that potential for retail product, or is that potentially just for banks to be able to maybe hedge with Bitcoin if the U.S. dollar is already being securitized as they the Fed is, I think, buying up corporate bonds right now. So interesting. I don't know, maybe. But yeah, I'm here to talk about security and DeFi because that's all cool. And if anyone has been paying attention to that, there was the big run up. Some of that had to do with a lot of DeFi liquidity coming into Ethereum, and then of course Bitcoin adding to that. So we pushed past 10K today. I think we're at 11K. I'm thinking we stay here, but we may not. Who knows? None of this is investment advice. No, it is. So I'm just going to share my screen. Just 1 second. Okay. Can everyone see the screen?
Yep, looks good.
Perfect. So yes, despite the hacks, the future is still DeFi. Just a heads up, there are some numbers in here. They have been updated on Friday. They, of course, may be incorrect as of today, as is crypto. So yeah, DeFi is the first category of applications to achieve product market fit with blockchain technology. The vision is to create a decentralized financial system that offers the financial products and services seen in traditional finance, but without a central authority. I'm sure we're all pretty familiar with that. Recently, it had surpassed $3 billion worth of value locked up in DeFi. I don't know what the exact number is today. I'd have to go take a look. But why does this matter? This metric is important because this means people are actively lending, borrowing, using derivatives, and using DEXs. In December 2019, the entire decentralized finance space market was worth less than $700 million. This indicates the desire for an alternative financial system, and this is, of course, real financial activity. Of course, this is, not Bitcoin stuff, but there is Bitcoin liquidity in some of these things, so it is quite interesting. So composability, aka money Legos. DeFi is also powerful because of its composability, meaning the components of the system can be connected to each other. Products and services within the DeFi ecosystem can be linked together to create new products. For example, Arteries. Arteries allows individuals to donate interest generated off their idle cryptocurrency to fund a nonprofit that plants trees. This app actually leverages two protocols, RDAI and Compound. And Compound's growth in the DeFi space was already going quickly in 2020, but its growth exploded thanks to their Comp governance token distributed in June. Before the distribution system began, Compound was also the second largest DeFi project per total value locked in its smart contracts. The growth, for Compound's growth, as traders have migrated to Compound to quote-unquote farm Comp, it became the largest DeFi project, and Comp token has taken the largest market cap of any DeFi token. That, of course, may be different as of today, but at the time of writing, over 584 million in value has recently flowed into DeFi projects to take advantage of very high yields. So this is kind of a little bit of a high level of how yield farming works, at least in the Compound system. So Compound protocol allows anyone to supply or borrow Ethereum tokens through a decentralized market, or Ethereum coins. Suppliers earn interest on any cryptocurrency supplied to the protocol, and borrowers pay interest. Each day, comp tokens are distributed to users of the protocol, allocated to each market in USDC, DAI proportional to interest accrued in that market. Incentivized liquidity, known as liquidity mining, has sometimes resulted in yields of 50 or even 100%. So it's basically incentivizing, trying to bring liquidity to these almost like they can be sometimes seen as money markets, but in this case, it's more trying to be savings. The ways people are getting these yields are becoming very complex. By plugging projects together, sometimes with themselves, rehypothecating assets, users can get higher yields. However, doing this can multiply financial and or smart contract risk. Yield farming apps heavily utilize ETH composability, which increase smart contract security risk. And of course, leveraging assets may lead to liquidation, and pretty serious liquidation when you've rehypothecated so much. So you gotta be very careful and know your stuff. DeFi's potential. So DeFi projects are tackling long-standing problems. They're addressing inefficiencies in our current financial system, improving financial inclusion, increasing liquidity, and reducing costs. DeFi applications are widening across numerous sectors and industries. And so these are some of the projects we're excited about. We're actually pretty excited about Idle Finance, a decentralized rebalancing protocol that allows users to automatically manage their digital asset allocation among various third-party DeFi protocols. Or NUO, a global cross-border borrowing, lending, and margin trading with its decentralized debt products. Pooled together is really cool. It enables healthy alternatives to traditional lotteries by incentivizing savings through their no-loss lottery. So everyone can pool together, and someone may win, but no one actually loses. And zero collateral, where under-collateralized DeFi loan, where you have under-collateralized DeFi loans on Ethereum. But there are, of course, security issues, and that's why we're here today talking about it. DeFi projects are easy to build powerful apps with, but that ease belays potential security issues. 26 million in value has been lost due to hacks of DeFi projects in 2020 alone. Many DeFi projects have had vulnerabilities found, or in some cases, funds stolen. A lot of times, these are under-collateralized loans, and calculating. Basically, what happens is an attacker can calculate the price of assets on chain, and they can easily be manipulated. A hacker takes advantage of this to create under-collateralized loans. DeFi protocol thought it might have enough collateral, but in fact, they just handed out free money, and the hacker then profited by not paying back the loan. So a good example of some of these hacks, and we're going to go through a few of them here, is the Statera deflationary token hack via Balancer. So what happened with Balancer is there was a DeFi liquidity provider in Balancer pool that had experienced a sophisticated hack where a loophole was exploited to trick the protocol into releasing 500,000 worth of tokens. The attack involved taking out a flash loan of wrapped ETH and repeatedly swapping it for deflationary token, STA. Since the STA portion of the Balancer pool was now nearly empty, the price of the STA had a large premium, which was then used to swap for ETH BTC Link and SNX. The attacker performed the attack until all STA pools were drained. Balancer pool is adding a transfer fee token to its blacklist and reviewing the protocol. The DeForce hack. So DeForce is a China-based DeForce network. Ultimately, 25 million worth of Bitcoin and Ethereum was stolen from DeForce's lending protocol, lendf.me. This exploit leveraged a reentrancy attack via IMBTC and its ERC-777 token standard. The hacker was able to increase their ability to borrow all other assets on DeForce's lending platform repeatedly, giving them the ability to exit all of the other assets deposited in the lending application. Ultimately, the hacker returned the money, and the founder of DeForce stated that they intend to redistribute them to their rightful owners. Of course, the infamous BZX hacks. So there were actually two hacks in this one. One was a logical bug hack, and the other was a Oracle attack. They both used flash loans to create massive buy-sell shifts in the market price on-chain exchanges. And ultimately, the same outcome happened. Attackers opened under-collateralized positions on BZX, and lenders ended up holding large bags. So with the logical bug attack, you can actually think of it as a bit of like a reentrancy, where they were able to trick the all in one smart contract. It was able to essentially make it seem like it was resubmitting its own balance inside of itself a bunch of times because there wasn't enough checks. And the Oracle attack, it was exploiting, I believe it was a delay or there was a problem with the Oracle feed. In any case, the price, they exploited the information incoming to it. So of course, security is crucial for DeFi's continued growth. If these projects are to become the future of our monetary system, security will be crucial to safeguard the value managed by these apps. Addressing some of the current challenges through monitoring tools, increased transparency, and insurance will help unleash DeFi's potential and set the stage for massive growth. And it could be part of a new financial system. The opportunity here is for people to opt in to an alternative system that is transparent, secure, and decentralized. It's borderless and accessible. Anyone with a smartphone and internet access can use DeFi applications and financial services. New markets and opportunities will change assets across the globe, and the impacts across all sectors, payments, banking, lending, and investing, it will impact these. And it could be potentially a future funding mechanism, along with other funding mechanisms, like Bitcoin grants or metacartel DAOs. DeFi could prove to be a useful core for future Web3 or open value network like microeconomic structures. And our role in all this is that we believe in the DeFi space and what it can provide to society. We're excited to play a key part in growing this ecosystem by securing these innovative projects. And of course, our mission will always be to secure the decentralized web. Recent news, as I mentioned earlier, we recently shipped the Prism Audit, which is the upcoming ETH2 client developed by Prismatic Labs. It will have a major impact on the DeFi space, potentially lower fees for transactions for DeFi projects. Transition, of course, to proof of stake which greatly increases speed, as well as removing completely removing proof of work. And it will pose some challenges. It will impact composability due to sharding, but I think there will be a lot of ways to deal with that. In spite of these hacks, there is incredible opportunity for growth and development within the DeFi space. We're still in the early days of DeFi, and innovative projects will continue pushing the boundaries. So thank you very much for my little talk. And if you want to hear more, scan the QR code, and it'll actually take you to our blog. And we have some recent talks, or some recent articles about DeForce, and you can go more into details of what happened there, as well as BZX. Thank you very much.
Awesome. Thank you so much. This was awesome. And there are a couple questions in the chat as more. We'll continue with those. Somebody did ask, I think in reference to the BZX hack, why did the hacker return the money?
I don't believe the hacker did return the money for BZX. For DeForce, it was because it was Sam Zhang, who is known in the security space as sort of an independent actor, and then will claim, I don't know if it was, I can't remember if it was Sam Zhang or not, but he is known for finding a lot of exploits and claiming rewards. But it's not like him to normally drain the funds. So I have to look into that one as to who hacked and why it was returned. If it was Sam Zhang, then that's just what he does. If it was someone else, then I don't know. Not sure.
Somebody asks, what does QuantStamp do?
So we're actually a security and solutions provider. So we will work with tons of organizations in the space and out of the space, where we secure the smart contracts all the way down to full protocols like layer ones, and we'll help big organizations get into blockchain. We've been around for a while. We're basically, along with Consensus Diligence, Trail of Bits, and Open Zeppelin, the four, one of the four major auditors in the blockchain space. So companies like Avalanche or Prismatic Labs, big foundations will work with us.
Somebody's asking, how does QuantStamp test or audit contracts?
So, well, we have a team of engineers and researchers And we typically use, I mean, they're all more formal methods based. So I can't speak specifically to the technicals of how they're auditing, but they're all generally University of Waterloo type of security profile, if that makes sense. So you'd have to take a look at our website, but we do a lot of, yeah, it's been a long day.
Next question is about the token. So can you go over what the QuantStamp token is and what it's used for?
The token is used to pay for scans on the network, the scanning network.
Can you kind of go into a little bit more detail about what this network is and how that functions?
So the decentralized network, it allows for any user to commit their code and see if it has any problems in it. It's not going to replace a full audit, but it's really good for when you're using doing basic development and that sort of stuff.
And are these focused around like if you're creating a blockchain, can you send that code in, or is it only for Ethereum-based smart contracts?
Ultimately, it is designed to be multi-chain long-term, but currently it supports Solidity smart contracts.
Cool. Somebody asks, does QuantScan insure smart contracts? That's a really interesting idea. What is your, aside from that question, in addition, what is your take on smart contract insurance?
Well, we think it's very important. We are looking at insurance-like products. One thing that we have been looking at is what's called chain proof, and depending on the application, there's only so much I can talk about with that one, but yeah, we think that generally the incentives are kind of wrong, and if something is hacked, it should pay out, if it's insured. So,
a related question is, where is the line of responsibility if a smart contract is written poorly to enable a hack?
So, if a smart contract is written poorly and it doesn't have an audit, or it does have an audit, I would need a little more context on that question.
Could we go down maybe the line of for both? So if it doesn't have an audit.
Well, so I mean, our thinking is the responsibility is ultimately with the person or people that launch the contract, but it is at a certain point out of the hands of anyone, one particular person. If this is a contract that is well audited and launched, and let's say it's very decentralized, the responsibility is still technically with the people who launched it, but over time that could change depending on how governance works. Like, take a look at over the week, on Friday, we actually put out an informal security review of YEarn, which is a fully decentralized DeFi project that actually started by someone just forking a bunch of code, and then the project was sort of removed from him and taken over by the community. And even though it was one person that started, now a community is responsible, but it's totally decentralized. So it's a case-by-case basis, in my opinion. But generally, the simple answer is the person who puts out the smart contract and commits it on chain. I mean, ultimately, if you're trying to launch a plane, and it hasn't gone through any proper checks, and a bunch of people die, right? Whose responsibility is it? It's a very similar allegory there.
Sounds very reasonable. A related question, just jumping a little ahead. Somebody asked, what if the audit misses something? Has that ever been the case? Or for like maybe other auditing companies, like what is usually the procedure protocol that happens afterwards?
Typically the security firm will work with the group, and security isn't perfect. I think that's one thing that people need to remember is it's never perfect. It's never 100%, but it's certainly much better than not. And that can happen. It has happened. And typically what happens is they'll just work with the group, try and fix it, make sure that no funds have been lost, and move forward from there and work and then learn from that and include that into their processes.
Somebody asks, or they say, I am currently studying blockchain and have an interest in DeFi. Do you know of a reputable learning source for online courses in DeFi?
Okay. Well, I guess it depends on what your knowledge of blockchain is first. If you just are getting into blockchain, I would recommend you start with the Bitcoin white paper. I mean, it is still the best piece of literature for 10 pages. If you do know what blockchain, if you do actually have that backing and you do understand that stuff, and you feel very confident with stuff like Ethereum, then a good place to check is Anthony Sasso's blog, The Defiant. There's a lot of good stuff there. But this stuff is very asymmetric. So if you're still not familiar, Ethereum.org is a great place to sort of start diving in the community section. But there's tons of resources. So I think a better thing would be is if I can get a little more context onto what you're looking to do and what you know already, then I could probably point you in the right direction.
Cool. It's good to see people are studying in a little bit more hardcore of a way. I think that's what he intended. Somebody after that says, how have or will increased Ethereum fees impact the future of DeFi development and sector growth, in your opinion?
That's a good question, right? Like already to send a DeFi contract, you're spending so much in fees, so you kind of have to have enough principal really to make up for those fees lost. It's the thing is ultimately we're dealing with a market, right? And we are dealing with a way that keeps it decentralized. And I think it's kind of a hard answer to really pinpoint that. I think, for Bitcoin, for example, I'm not sure that fees alone are going to be enough to sustain miners long term, but we also don't know, right? There's probably going to be downward pressure from off-chain sources where transactions are just happening in centralized order books, or they're happening on layer 2 solutions. When it comes to DeFi specifically, sure, I think it's going to be a big blocker. But for most people, someone say sends 200 worth of Ethereum to someone else, they're not likely sending that into DeFi, and so that those gas prices don't really reflect that. Yes, they're paying more in gas fees, but it's also a bit of an indicator of what's happening on the network, not necessarily a good or bad indicator, just an indicator within the context of what's happening. So there's not really a good answer, I guess.
Somebody asks, back to the auditing question, if a project doesn't want to share their code base, what measures are in place to prevent code hacking by competitors?
So if the code is not shared, like put out open source and then launched on chain, or for the audit itself?
Todd, if you'd like to go into a little bit more detail, you can use the chat. Otherwise, if you'd like to actually ask the question over the video call, just use a little emoji and I'll see it, and we'll just have you ask directly. Something. Oh yeah. Yep.
Sorry for the series of questions. I thought this one kind of interesting. Like, let's say you've spent a lot of time building this code base that you want to keep kind of proprietary, but you also want to have it audited. You put a lot of time and labor into something, and let's say you're not an open source kind of company, right?
Well, I mean, so let's say you engage with us. We need to take a look at the code base, but that's totally your choice whether you want to have that public or not. Ultimately, the smart contract that's put out is going to be public on Ethereum. So, but the code, not all the code base is, not everything is a smart contract. So it really depends on the project. A lot of projects do, in fact, actually keep a lot of their code proprietary, and then they'll have some section of it public, or some will just go fully public, or, it really depends, but it's always up to the client, ultimately.
Okay, so QuantStamp will be able to kind of keep that on the wraps. Right?
Yeah, I mean, so that's kind of part of the service that we offer, right, is when we do audit a project, we're putting our best foot forward, and essentially, like, we're saying, yes, this is good, or no, this isn't, or, ultimately we're giving you, our views in a report. If none of those fixes are put in that we had suggested, and then you release the report, anyone can take a look at that report and then look at what happened if there was a hack and go, oh, well, they were just showing the report, but they didn't put in any fixes, right? So having the code itself public doesn't necessarily mean much. It's kind of like a bunch of things. The report is just simply saying how we feel about it, and provide guidance from there.
Good question, Todd. I actually have also a question. When you look across the landscape of DeFi, what are some security measures that on the user side people should look out for, and on the protocol side, teams should look out for that would be something you recommend are immediately potentially a risk and something that they can resolve?
Well, for DeFi, for users, I think they should just be very conscious of potentially getting liquidated, like as mentioned in the project. In terms of security related stuff, if it's not a well audited project and you're not familiar with the space, maybe be very conscious of where you put your money. So for example, why earn, right? We didn't do a full audit. We just did an informal security review. So if you feel, if you want to take that risk, then that's up to you. Ultimately, security should factor into your risk profile of these risk assets and these risk products. For projects, you know, you have to remember, like, these are projects, these are ultimately things that could hold millions and millions of dollars worth of value, and you get one shot to put it out there, generally. And there's a reason, again, there's a reason why airplanes are really well audited before they're allowed to fly. So the audits, unfortunately, sometimes are a little bit inaccessible, but there are ways to get to that point. We actually work with a lot of groups that do a lot of funding for projects. So it's important ultimately to make sure that you have the support of the ecosystem if you're looking to be a project that has legs and that is deemed legitimate, because there is a mentality in the space about that. So that's also an inherent pressure.
How can people learn more about how to assess, looking broader than DeFi, like using a blockchain? How can people assess whether a blockchain is relatively secure, relatively safe to use? So, like, in addition to looking for an audit, what would you recommend are best practices?
Well, I mean, that's a good question, right? I mean, I don't know that Ethereum itself was really audited before it launched. ETH2 is, but because now people realize the need for that, and there's also a security infrastructure to do so, and you know, new layer 1 chains coming out are more audited. But I think it's, if you don't know about the project and your friends don't know about the project, it's probably a good indicator that it's not as legit. And you know, I've said this before, but cryptocurrency is chaotic neutral, and I'm sure you're all well aware that there's a lot of stuff that happens in crypto. So you know, you have to be careful. And if you're new to crypto, it's usually best to stick with things for at least for a while that have the confidence of a large proportion of the blockchain space. You know, if you're looking in sort of in more the enterprise side, you know, then there's big companies that build these. But I think we're seeing a lot more acceptance of public blockchains, which is great. So I don't know if that answers the question, but I think it's important to know that there's not really ever a right answer, but there are ways to sort of deem something good and other things not so good.
Somebody says, if you're interested in a project, join its Discord group and get to know it, or whatever platform they use. Yeah. Somebody asks, how are US entities participating at this point? I assume it's about DeFi. So they continue saying, what portion of DeFi is relatively unregulated?
I mean, I think a large portion of it is, you know, it's unregulated. These aren't FDIC insured accounts, right? I mean, you're interacting directly with smart contracts using a Web3 enabled wallet, whether it's MetaMask or a Wallet Connect, one or whatever. And a lot of times it's with decentralized exchanges like Uniswap or Kyber or IDEX or whatever. And so there isn't any control on that. And so then how do you judge something as being sort of good or safe? It's like, well, if a lot of the community has the trust in it, then maybe there's a better chance that it's safer. The nice thing is there has been over the last few years, a big increase in projects showing that they've been audited by this group or that group, and especially those that have been audited by the Big Four, multiple times, is a really good indicator that the team is serious. And even still, you might still be interacting with it through just your wallet, sending DAI, and you're not dealing with any third-party entity or any agency or anything like that. You're sending your DAI or your ETH or whatever directly to the project and managing it that way. And you get liquidated, you get liquidated.
Somebody asked, have you heard anything about nexusmutual.io?
Yeah, they're great. We've been watching them for a long time. They do really great stuff. They do insurance. They insure smart contract projects. And yeah, it's a great project.
Cool. Is there, besides QuantStamp, what DeFi player are you most excited about?
Me personally, which DeFi project?
Mm-hmm.
I'll be honest. I'm pretty excited about Bitcoin and Ethereum right now. My colleague Danger is very excited by a lot of DeFi projects. But I would say, if I had to pick one, I really like Curve. I think it has a lot of interesting things you can do with it. And maybe because I come from a design background, I think it's just like the design of it is just great. But that's not maybe the answer you're looking for.
I'm going to actually drop the link for Curve.
Curve.finance.
Yeah, curve.fi, I think.
Yeah.
And so people can check it out. I'm going to say Jay co-signed that this is cool, so I'm going to put it in the chat here.
Not investment advice, obviously.
Yeah. Somebody says, do you audit Cosmos blockchain or Tezos?
Well, we've done work with Tendermint. We haven't audited Cosmos specifically, but the underlying technology is Tendermint. Tezos, no, we didn't work with. I don't believe we've worked with Tezos, but yeah, they're also a pretty cool project that I haven't really looked into them too much, but they've been around for a while. It's nice to see they've gotten beyond way far beyond their issues with their foundation issues years ago, but I believe, from what I remember, they have some pretty Bitcoin maximalist-like views. So.
Mm-hmm. When you look across into the future, you put some goggles on and you can see the next 5 to 10 years. What do you see as no longer such a big problem in the DeFi space? I mean, some issues today involve oracles or smart contracts, etc. What do you think is being done right now that will, in the next 5 to 10 years, resolve one of those security holes that we have today?
Well, I'll tell you one thing that I think is resolved right now that I think doesn't get enough attention. It's simply just onboarding. Going from a wallet to a protocol is seamless. Honestly, it's better than going to a normal website and logging in with your email. I like using Ethereum, but that's not the only one. Every wallet has pros and cons depending on its use case. Right, for just sending, ETH or DAI to one person and the next, I think Ethereum is really great. But other wallet connect wallets that might be a little bit better for DeFi. I mean, it's so simple. You literally scan it, and now you're logged in, which we didn't have 3 years ago. And the on-ramps that we have now are a lot deeper. It's never perfect, obviously. So I think that's something that it doesn't get enough attention that I think is really cool that's available now. 5 years from now, in terms of security, well, okay, 5 years from now, I think Bitcoin will largely be seen as maybe not mainstream, but certainly much closer to it. If it doesn't go this time, I think maybe next time. I think composability, the concept, will continue, not just in DeFi, but also in maybe the Web 2 or even Web 2.5 space, where you'll have these plug and play, very well developed plug and play pieces that you can, you can just set up your own organization, your own co-op, your own company, kind of like Shopify in a way, but you just take a bunch of off-the-shelf pieces, what makes sense, and then you just put it out there. And I think maybe 5 years from now, we're going to start seeing some like decentralized storage. I don't know, it's kind of hard to say, right? But I feel like there's a renewed decentralized storage push with actual technology ready to go. So that's interesting. And I think the push towards decentralizing the internet more, there will be a lot more tools to actually push that forward. There are tools now, but you also need ecosystem work developed around that. And I think ecosystem will be there. Certainly Ethereum has been very close with protocol labs. So, seeing like projects like IPFS might actually be a lot more seen. From a ETH2 perspective, I mean, I think we'll probably be at this point we don't know, like we're only getting into phase 0, right? But we could be actually well on our way into actually being at the point of where projects are migrating from ETH2 to ETH1 to ETH2. It's still really, we don't know. But that's probably going to be the biggest area of security is how do you migrate projects onto ETH2. And I think we'll also see, other layer ones gain some traction. We'll see. You never know. But certainly there's some compelling reasons to try some other projects. The maturity of the whole space, you look at the maturity of, say, where we were in 2016 and where we are now, and the problems we were facing. I mean, there's a huge difference. We still hadn't really solved merchant adoption, which tried to happen in the 2013 time. That's when a lot of problems sort of came to fruition. Now, I don't know that we necessarily have those problems solved, but we have the tools, we have the tooling, the user side apps, and the support from bigger institutions to maybe actually provide much better solutions. So I think we'll see a lot more of that. Will we actually see merchant adoption of crypto? Maybe of Bitcoin, but probably more likely of maybe more stable coins. I hope we get to see more Bitcoin adoption, but it really depends on where the volatility is then.
All solid points there. Somebody says, thanks for another great meetup. Shout out to the Miami Bitcoin Center. If you want to drop a link to the Miami Bitcoin Center, you're free to do so. That'll be cool for everybody. And also, we should include the Miami Bitcoin Center in our collaboration with these events. So we can, while we're still continuing virtual events, we can continue to help more people and other different cool projects. Somebody's asking, how do you explain high yields in DeFi? Do you feel that the market for yields is efficiently priced?
I think these are really high yields. It's like any other sort of, oh wow, we got something that seems to work kind of thing, right? And it's high yields with liquidity tokens, rehypothecating, pushing it up further. How do I equate with it? These are still essentially tests. So be careful. I think it also goes to show that people are excited about this stuff again. I think that it's an interesting time in crypto again. And if this, this stuff was happening about a year ago, but I don't know that there's as much. Some of the stuff was happening about a year ago, but there wasn't as much sort of fervor around it. But the drop, like we saw in March when DAI depegged, that the DeFi market actually recovered pretty quickly. So yes, that could be because of the time we're in, but it could also be because these are ultimately stable coins with generally lending and collateralization products, and that in and of itself brings volatility into market, which brings liquidity into Bitcoin and Ethereum. Also, I saw someone say MadeSafe. Is MadeSafe still around? I don't even know that they're still developed. Like, I think maybe there's 3 people on it. I don't know. A friend of mine used to be pretty active in MadeSafe, but it's been like going on for what, 13 years now? Like before Bitcoin, it's always finding a different. I think I heard last that they're changing their Made token. Yeah, I don't know that it's. I think I'm more excited about seeing that Swarm is actually a thing again. So.
Yep, that person says, yeah, I was excited about it a million years ago. Sounds like a desperate rebrand.
That was a nice callback though. Yes, I remember MadeSafe.
A couple more questions here. Someone says, follow-up question on learning DeFi and resources. They say, I'm a data warehouse architect moving into a blockchain solutions architect, looking to be knowledgeable in the DeFi space from a design standpoint. Awesome. They're looking for good learning sources in the space. Do you recommend any others?
Well, I mean, ultimately, it's smart contract development, understanding, right? It's knowing how these things are built from a technical level, and then understanding how these things work from a financial technical level. And I think, learning the basics of Ethereum again is first thing, way to go, and then just really paying attention to what's going on in the DeFi space. Is really there's so much information going on all the time. You really have to just sort of pay attention to what's going on. Getting into DeFi groups, paying attention to newsletters like Defiant or Will Sasso's The Daily Gwei, I think is what's called. And just going and checking out the projects and trying them out for yourself, because there's not really a single source, right? These are community projects. It's built on community-oriented space, and then when there's projects, whether it's community or it's a company or whatever, it's still operating within that context.
Hey, this is Jack. I just had a quick add to that, if everybody's okay. I'm currently in an Ethereum boot camp from Udemy. I don't know if you guys have heard of Udemy. It's online training. And it's actually very thorough, it's very intense, and it's a lot of building of smart contracts. And if you go into Udemy with in incognito mode, you can easily get a cheap price of like $11 for the training, which is 50 plus hours. So that's a little hack that I'm in the middle of it right now, and I'm learning a lot. So I recommend that, and I also recommend the Mastering Ethereum O'Reilly book, which I'm about halfway through right now. So in terms of training, that's a great source.
Mastering Ethereum is excellent, excellent. I will say that there are some, it's already a little bit outdated, unfortunately, because of how quickly it moves. And we actually did put out a book about a year and a half ago, 2 years ago now, called Fundamentals of Smart Contract Security, which is also available on Amazon. So it's not written by QuantStamp, but it's all people who work at QuantStamp that are involved in that book. So
yeah, I don't think I heard anyone mention it, but there's also Crypto Zombies, which is sort of like a crash course for Solidity.
Yeah,
I think they're still using Solidity 4.24, but which like you don't get to determine if you're like where your variables are stored, whether they're on your machine or on chain, but it still gets you like in the mindset for how to program on a smart contract specifically.
Yeah.
Another thing I'd also suggest if people are trying to learn is if you go onto, I think it's like Etherscan, and you look up like the token for like Decentraland, for example, you can actually find their contracts and actually see how they wrote their Solidity contracts and actually download them and review them and read them. And you will learn so much about the code and what's being done. And then you can go to some place like the remix for Solidity and then practice actually using it. And I'll post that down there as well.
Yeah, those are really good suggestions.
Awesome. If anyone has any last questions, please put them in the chat, and we'll start to wrap up here. One last question, at least just from me, is you did mention Web 2 or Web 2.5. The phrase Web 3 is, I mean, I use it all the time. We use these terms a lot in the space. Could you, just for all of us and for the record, help us understand what each of those levels is?
So, okay, everyone has a different view. And honestly, it's still very philosophical at this point. But my view is Web3 is essentially the ecosystem of protocols that leverage decentralization generally first, and leverage technical ways of interacting that include economic value movement, interaction, decentralized storage, essentially moving away from trying to rely on centralized entities. When that is available, I think what we'll start to see are types of organized, leaderless organizations on top of that. And I think people often include those in Web3 talks, when I think that's more of a type of organization that will emerge from the availability of Web3, such as open value-like networks, like I mentioned. And I think the legacy system is built to legally define ownership rights and who is in control or who has authority or who's liable for potential organizations. And there's a big problem where, say, like a hackerspace it's very hard for them to be a hackerspace because it has no true ownership, like no one really has an ownership of it. So they have to find ways like just, kind of be listed as a storage space or be set up a little co-op that offsets legal liability there, or it basically doesn't, the legal framework doesn't include these kinds of things. And so Web3, in my view, will be infrastructure that ultimately allows for these kinds of organizations to have a space to exist, and so it's also ultimately a anti-fragile system.
If anybody has any more questions about this space or wants to follow,
I do. I have a question. So in regards to that, obviously, create kind of an anti-fragile system. I assume you're assuming that we're going to use different people's PCs. So it's my PC, it's your PC, it's everybody's PC integrated in this decentralized system. Is that how you see it? Or are we going to have the problem of basically cloud computing taking over everything? Because the problem I see right now is, I think with the staking and everything, that there's security vulnerability, there's how much the liability of doing it, that I think that we're going to start seeing more and more cloud computers actually taking on these roles versus our actual own PCs.
So that's a real problem, right? I don't disagree that you could just go on AWS and spin up a node. Well, how is that? It's centralizing it, right?
It's centralizing.
Comes to the argument of, say, Infura or some of these other Web3 providers. And I think that's really why incentive mechanisms are needed for decentralized storage. Remains to be seen if it can work.
Yeah. I
think it's the uptime issue is really the problem.
Exactly.
If I set up a node in my own home, great, that's awesome. I just hope my power doesn't go out.
Because then you're decentralized and you pay the cost if it goes down.
Exactly. Exactly. So, I don't think there's really an easy answer to that. I think a lot of AWS providers, or I think a lot of cloud service providers want to be the solution to that because they see people just are going to be lazy and do that. But there's also a disincentive to that, and I think I'm not sure who mentioned it, but if you follow sort of regulatory, if you're putting everything on AWS, then it's not decentralized.
Correct.
And then now you're putting legal overhead. So that's potential, but then you don't really have control where people put these nodes. So I don't know that there's an easy answer, but you could say the same thing about ISPs, right? If you want to go more fundamental, well, we need to be on mesh network. So I don't know that we're like, I think it's going to be slowly going that way. And I think, if you end up having a bunch of nodes on AWS, it opens it up for being a centralized attack vector. And so then it's a centralized attack vector. Well, maybe the space is going to have to learn a hard lesson to not do that. I don't really have an answer for that, but I think light clients is actually a really good way to go about move beyond this. Like if you can have a really good ETH2 light client that runs in your wallet on your phone, let's status Nimbus, right? Then you just download you just download status, you install it, and suddenly it's running a node on your phone, and it's essentially it's not a stateless system, but the state storage is very minimal. That's kind of getting away from that because now you're leveraging a very simple user interaction where the user isn't really thinking about uptime or downtime. Yes, if their phone dies, that's a problem for slashing.
Well, I think that's where the idea of 5G was coming in. With the high speed of 5G, everybody could have it, and you could spread that across everybody's phone, that if one phone went down, something else would pick it up, ideally. Mm-hmm. And that would probably create that mesh network that you're talking about.
Yeah. But honestly, I don't know that there's an easy answer.
No, sure.
At the end of the day, like, it's kind of the question is almost a little out of scope, right?
Well, it's the same thing with Bitcoin. It's become so large that you can't just, I can't imagine storing Bitcoin, the database, the ledger on my phone, so it's become the problem.
But it's still smaller than the Ethereum, history. So
Bitcoin's like 140 gigs, I think, or terabyte. Gigabyte.
Okay.
Gigabyte.
It's not still megabytes, still single megabyte blocks. It's all good. But yeah, that is a point. But I think the nature of it being community first also helps it because people then shift to thinking in terms of more anti-fragile organization and asymmetry. Yeah, it makes it way harder to learn all the stuff and you have to chase everyone down and it just makes it more of a headache. But it ends up being a lot stronger long-term, just like open source, but it's incentivized open source. So, there's not really a good answer there.
Yeah. This is has been an awesome educational experience and also some really good topics that we touched on. And if people want to learn about these topics more deeply after this presentation and keep up with what you're doing and what QuantStamp is doing, where should people follow you or QuantStamp?
Check us out, quantstamp.com. Check out our blog, quantstamp.com/blog. We always have a lot of really good pieces there. Also, where most of what you can learn about QuantStamp is on Twitter. So just at QuantStamp, QUANT, or QUANTSTAMP. Long night. And feel free to hit me up on Twitter at Jaye Harrill, JayeHarrill on Twitter. And I'm always happy to answer questions or sort of point you in the right direction. So feel free to tweet at me.
Yeah, I just added those links in the chat. So quantstamp.com, QuantStamp's Twitter, and Jay's Twitter, they're all in the chat there. You guys go follow them and tell them how cool and important they are. We have, we're basically just gonna wrap up now. If anybody wants to continue to receive notifications about when we have more events like this, we do talk a lot about DeFi at our events. We've had 0x and a few other DeFi projects come on. We also have a Discord channel that you can join. I'll put the link here. But before we have our very last closing remarks, let's give it up with a little muted round of applause for Jaye. Thank you so much for coming here and for, after such a long day, still sticking it out with us across different time zones. So, well, applause for you.
Pleasure. I always like doing meetups like this, honestly. It's why I got into the space in the first place.
And we're hoping to continue this virtually as long as we need to before we can do things in person. But while we're virtual, it's great that people can connect from different time zones and different geographies. Just makes things pretty cool.
And then Jabron, can you be sure to put our email list one more time so everybody can get that, because we have some folks from out of town that need to be updated about our events.
I'm adding that in right now. Brian, do you have any closing remarks?
One of the things that we like to do is make sure that everybody that's here, if they have anything to say, that they go ahead and say it. So the floor is open. You have 1 minute. Anybody speak now or forever hold your peace until the next 2 weeks when we're doing this all again.
Thank you for the invite, Joe. I enjoyed myself, and this is a really nice presentation you guys have put on. Thank you.
Awesome.
Cool. We definitely take compliments.